I am super excited to be here today with Terri Wright, who's a recently retired insurance agent of 18 years. She's been working in the state of Maine for the last 18 years, bringing insurance and information to people in the state of Maine, including myself. Had such a great experience that I wanted to bring it to you. So Terri, what tell me what insurance is, why we should have it, and what types of insurance people might want to have.
Sure. So just in general, insurance is just a way of spreading the risk of having large losses or large expenses out of your own pocket, spreading it amongst a lot of people. So basically an insurance company takes in premiums that, are hopefully on the lower side. So you're paying a reasonable amount that you could pay every year, every month. And in exchange for that, if you have a large loss that's covered, the insurance company is going to pay that big check all at once, which would be very difficult for the average person.
Got it.
The types of insurance that you may want to purchase for, it's different for everybody, but in general, auto insurance is the most common. If you drive a car at all, of course, you're required to have liability insurance. And if you have a loan, you need to cover the vehicle itself.
Yep.
If you own a home, you're probably going to want homeowners insurance, especially if you have a mortgage, it's going to be required.
Yep.
And when you have assets like a home, and most people don't think, but their income is actually their biggest asset in most cases, you want to protect that as well. And there's many ways that you can protect your income with insurance, including things like a liability umbrella policy, which covers you in the event of a lawsuit against you.
Okay.
It could be a lawsuit from getting into a car accident and somebody having serious injuries, or just a lot of damage to property like other cars, or even, God forbid, if you hit a building, that can add up really quickly.
Sure.
It could be a liability case from somebody at your home, or even if you're a renter, if you have an animal that caused injury to somebody, maybe it was a dog bite or their leash tripped somebody and they got hurt.
Okay.
So it protects you for those liability exposures where you could have a personal lawsuit against you.
Yep.
And then you can also protect your paycheck with life and disability insurance, which replaces that paycheck if you're unable to work.
And do all of those overlap? So if you have one policy that covers, does another one cover should you need more, or things like that? Or if you're covered under one thing, you can't cover your salary with another?
That's a good question. The liability umbrella policy that I mentioned overlaps. It goes over the auto and the home. You have to have a certain amount of liability protection on your auto and your residence to get a liability umbrella, and then the umbrella covers over that. So they really work in tandem with each other. Disability insurance is one you had asked about overlapping as well. And there are limitations as to how much disability insurance you can get if you have disability insurance at work.
Yeah.
You may be able to get some additional individually. Could be like you have disability that protects your paycheck at work, and you may be able to get an additional disability that protects your mortgage specifically on top of that. But there are some restrictions as to the maximum amount of your income that can be replaced with a disability policy.
Gotcha. And are any of these insurances required? Are people required to have them?
Well, I can only speak for the state of Maine right now, but in Maine, you're required to carry liability insurance if you drive a car.
Okay.
So you have to provide proof of insurance when you register your vehicle. And if you get pulled over and don't have proof of insurance, you can be ticketed for that. So you do have to provide the liability again if you cause injury to somebody, if you damage other people's property, that type of thing. You're required to carry medical payments, which covers injuries for you and other people in your vehicle. And you're required to carry uninsured motorist coverage, which a lot of people don't think about and kind of discount it unless they need it. But uninsured motorist covers if somebody hits you and causes injury to you, and they either don't have insurance or they don't carry enough insurance. So if you're carrying really good liability limits, that gives you additional protection as well. For if somebody causes injury to you and they either carry the minimum limit, which in Maine is only $50,000 per person, or if they could be driving without insurance, even though it is required in the state of Maine, there's still, approximately 10-11% of the population that drives without insurance for various reasons.
Gotcha. So what I'm hearing right now is critical to find the right insurance agent, because there's a lot of information and a lot of detail. And it's clear that each person's going to have a different need, right? different salary requirements, different ownership, whether it's homeowners or renters. How many vehicles are there? Multiple drivers of that vehicle, right? Because I imagine you're not just insuring the vehicle, but you're insuring yourself. And like it just, I'm already to the point now where I'm like, okay, I need somebody else who's an expert in this. So how do you pick the right insurance agent and the right insurance company?
Sure. Well, I want to address part of your question there too is every company has different rules around, for instance, like who is a cover driver on your vehicle and things of that nature. So, and there's so many coverage options, whether it be the liability protection or your deductibles and things like that. There's a lot of commercials out there, websites that really encourage people to do it on their own. But unless it's something that you've really spent some time researching and studying, it's not the easiest thing to kind of do it yourself on.
Right.
So it is good to have a professional that can help educate you on how much insurance you should have. Versus also, you don't want to be overinsured. You don't want to be paying more than you need to pay for insurance either. A lot of people refer to it as being insurance poor. But you do want to make sure that you have that right amount of coverage, and an insurance professional can help you to kind of understand what your options are and select what that best package is of, maybe it's easier for me to absorb a slightly higher deductible, a difference of $250 or $500 out of pocket if something happens to my car would be easier to kind of bounce back from, versus if I get into an accident and I cause severe injury to somebody and I'm sued for $300,000. If I don't have enough liability protection for that and I have a large gap in what I'm responsible for, that's going to be much more difficult to bounce back from. So an insurance professional can really help you to figure out what is that best kind of package for you, what works for your situation. Though also a good insurance will ask you questions about more things other than just your car that you drive or the house that you're insuring. They're going to want to know more about you so that they can make proper recommendations to you.
Which leads me to my next question that I was thinking of, which is when I go to talk to an insurance agent, what should I be asking, right? How do I query out what I need and whether you're the right fit for me?
Sure. Well, I would, you really need to get a feel for the person, and if you feel comfortable with that person, of course. But one of the things that I would be aware of and think about while you're talking to the person is this person just giving me something that is kind of a run-of-the-mill standard, what they give to everybody, or are they asking me questions about my situation to know more about me, to make sure that they're helping me to provide the right package? It's insurance is sales, and there are some people out there that are even companies that time their people and they want them off the phone in a certain amount of time. So there are some kind of transactional insurance conversations that happen that are, it's because they're being timed and they're trying to get through a certain number of customers, a certain number of calls per day and things like that. You really want somebody who's going to take the time to explain to you what each coverage means and help you to determine what's going to be a good fit for you. So to me, the most important thing would be to have somebody that takes some time on the front end to help me put together the right package, and on your home, making sure that you have the right amount of coverage on the structure. It's not just based on how much you paid for the house. You really want to insure your home to what it will cost to rebuild it today. Depending on what market you're in, that number could be very, very different, where, in some places the market value is higher than what it would cost to rebuild. And in some places that number is significantly lower. So you really need somebody that can help you with even calculations like that again is relatively difficult to do on your own unless you've just built that house yourself.
Gotcha. And so it sounds like obviously you need a professional for this, which is just very clear. But also we hear a lot on commercials and things like that about bundling and things like that. So I'm guessing, do insurance agents only work under one company, or are there some insurance agents that work with multiple companies?
Sure, that's a good question. So there's both structures out there. I used to work for an insurance company where I just represented basically one carrier. That's called a direct agency or a direct writer.
Okay.
There are brokerages out there that work with multiple carriers. So if you have, you may have more complex needs, for instance, a certain type of business that you may have to shop amongst a lot of different carriers, or because of driving record or things like that, that you may need to shop with a broker that can call and basically shop your policy with multiple carriers all at the same time. But for a lot of people, I worked with a lot of people as a direct writer, and really was able to put together good packages for people's, the day-to-day average needs we could typically take care of, even though it was a direct writer and with one company. The benefit of that is, I know those policies inside and out because I'm just working with one carrier. And because I don't have to know 30 different auto policies, I know everything about this one policy.
And it sounds like you took a lot of time to find out about your clients as well, to understand what their needs are. So if there was a change in family status or what have you, right? Because there's like so many different parts of it. So we haven't talked a lot about homeowners insurance or life insurance, or we've talked a lot about auto. So tell me a little bit about homeowners insurance. We've got some new rules in the state of Maine about disclosures about flood insurance. So homeowners policies, what types of, it's my understanding that it's required if you have a mortgage. It's not required if you own your home outright. I'd love to hear a little bit about that, but also about why would you have it or not have it. I feel like I know what I think, but I'm curious what from an insurance perspective.
Mm-hmm. So homeowners insurance, as you mentioned, is required if you have a mortgage. The mortgage company is going to require that you have insurance so that if something happens to the property, it can be rebuilt or the mortgage can be paid off, because they want to protect their interests. And
I'm going to interrupt for just 1 second. Does the mortgage company require you to insure what they have out on the house or the total value?
Typically, they're going to require that you insure the home at minimum for what you owe as a loan on the property. Again, there are areas where the cost to rebuild could be less than what your mortgage might be because the market values are so high. In that case, again, your insurance agent will work with your mortgage broker to provide the correct documentation to show that you're insuring the home for its full replacement cost or what it would cost to rebuild that structure today.
Gotcha. So we were talking about, sorry, because I interrupted, what kind of coverages you want. Does it cover your personal property? Things like that.
Sure. So homeowners insurance, again, mostly covers the structure itself. So if something happens, something major, it has to be something that's sudden and accidental, like a fire or burst pipes, somebody breaking into your home, a tree landing on your home, lightning damage, things like that are sudden and accidental.
So is a hurricane accidental? We just had a big hurricane.
Yeah. Yes. So in Maine, hurricanes are covered under your homeowner's policy. There are certain things that are not covered. So you mentioned flood insurance before. Flood insurance is not covered unless you specifically purchase flood insurance. So flood insurance, earthquake, and mudslide are the kind of three major ones that you would have to purchase additional coverage for. In some states, wind and or hurricane insurance is separate. Here in the Northeast, it tends to be typically included just as part of your homeowner's policy.
We should probably define what a flood is anyway, right?
Yeah.
So like, is it I left my sink running and it got clogged up and I flooded my basement? Or is it the river, we had so much rain that the river overran? Or is it both? Or something else?
Yes. So a flood is actually defined by the government, by the National Flood Insurance Program, as when there is 2 acres or more or 2 properties of more of standing groundwater in an area that's not typically covered by standing groundwater. So it is possible, especially in Maine, we have a lot of basements. We have, you have like seepage issues, things like that. Just because you have water in your basement, it's not necessarily going to be a flood. There are some different types of coverages, like there's a backup of sewer and drain coverage that a lot of companies will offer that you could get for those types of scenarios. But a flood is specifically 2 acres or more or 2 properties or more of standing groundwater. So there are plenty of situations that happen that are not covered as a backup and not a flood. But again, typically the major like catastrophic damage that would happen by water would typically fall under flooding. Could also be like coastal waters rising, rivers, lakes, but also, could be an issue with groundwater runoff and things like that. So just because you're not close to a large body of water doesn't mean that you wouldn't necessarily want to have flood insurance, because there are plenty of things that could happen where, North Carolina just this summer got 25 inches of rain in one storm. There were places, in a short period of time. So there were places that weren't necessarily near a large body of water, but just where the the water, where the water typically diverts to,
Yep.
those systems just couldn't keep up with
Sure.
the amount of groundwater. So, places flooded that weren't necessarily in a high risk flood zone. If your home is not in a high risk flood zone, you're not required to have flood insurance, but it can be very inexpensive to purchase. So depending on, the lay of the land and where your home is and things like that, it could still be a good idea to have it even if it's not required. But flood insurance is required if you're in a high risk flood zone, if you do have a mortgage. So if you are purchasing a home, shopping for a home, and you're going to have a mortgage on that home, especially if you're near a body of water, but it's a good idea just to research in the beginning just to make sure that it's not in a high risk flood zone. Maps were redone by FEMA just a few years ago. And so the prior owner may not have been required to have insurance, but now the new owner may be required. So it's a good idea to have your insurance professional do a flood zone determination just to verify if it's in a high risk flood zone, and to give you an idea of what that premium might be if you choose to insure it. Because whether you need flood insurance and how much the flood insurance is could make or break your decision on purchasing a home.
Gotcha. And so what about me or my property, be it a car or a home or my salary or what have you, determines my premium? So I had heard rumor that your credit score not only affects your mortgage, but affects your insurance rates. Really?
Yes, absolutely.
Oh my goodness. Okay.
Yes. So it's a little bit controversial. A lot of people don't love the fact that credit score is built into kind of your insurance premiums, but most companies do use it because actuarially speaking, actuaries are the ones that calculate the rates. There is a correlation between, how you manage your finances and how likely you are to have an insurance claim. So the government does allow that information to be used in calculating your insurance premium. So keeping a good credit score is a really good way of, keeping your expenses down, including your mortgage rates, but also your insurance premiums. Also, not filing small claims, whether it's your auto or your home or renters or what have you. If you file a lot of small claims, that's going to increase your insurance premiums overall. And so if you carry higher deductibles, you get a lower premium for that, but also you're going to be less likely to file small claims. So that also helps you to keep your insurance premiums down by kind of taking on the little things, kind of those nuisance expenses. You may have a fender bender or something where there's $600 or $700 in damage to your car. You may choose to pay that little one out of pocket so that your insurance rates don't go up over time, but use it for the bigger things. And like I said, just because if you're planning on doing that, you may want to just carry a higher deductible, like a $500 or $1,000 deductible on a car. For a home, the larger your home is, the higher the deductible you may want to choose because you're going to save a lot of premium. My rule of thumb on homeowners insurance is if what I call the break even, if the difference in premium, if you can make up that difference in premium versus what the deductible is in less than 10 years. So for instance, if you're taking on an extra $1,000 deductible, but you're saving $150 per year on a premium, it's taking you way less time than 10 years of saving $150 per year in premium versus that extra $1,000 that you would pay out of pocket for a deductible. So that's kind of a rule of thumb. If it's much over 10 years, it's just a preference, but I just don't think it's necessarily worth it to take on that extra higher deductible if it's not going to save you much money over time in the long run.
Interesting. So I'm going to shift gears here and talk a little bit about life insurance. So who needs it? Some people think kids need it. Some people think they don't. Adults, as we're in different phases of life, do we change it? Whole life? I feel like there's another kind of life that I don't even know. There's so much information about life insurance. Who should have it? And how do you determine how much?
Sure. That's a great question. And again, working with an insurance professional on this is important. It's not an easy topic to kind of handle on your own. If you're required to have a very specific amount of insurance for a specific amount of time to cover a loan or like a divorce, either like alimony or child support payments or things like that, it's relatively simple. But again, an insurance professional might help you to find, there's a product out there that's called a return of premium. It's used a lot in a divorce situation because if you you have to pay into this policy for 10 or 20 years to cover a child support or alimony payment, you're not really getting a lot of benefit from it. That benefit would likely go to your ex-spouse or your children. But if you outlive that policy, you could get all your premiums back. So some people will use it as kind of a way to make it a little bit less painful for them, that they have to have this insurance that they may not be super excited about having, but they're required to have. So there's different types. Like I said, basic term is just something that's a specific amount of coverage for a specific amount of time. It carries the lowest premium in general, where it's cheaper to have a larger amount of coverage because it's for a specific amount of time. For most people, they're looking at term insurance when they're younger. So statistically speaking, you're less likely to pass away during that time. So the younger you are, the less expensive your life insurance is going to be in general. So there is definitely a use for term insurance. But if you look at how much you pay over time, at the end of a basic term policy, you just walk away from it. If you have outlived the policy, you've paid in a premium, you're not going to get anything in return if you outlive that policy. The return of premium I mentioned, you could get your money back at the end, but then the insurance coverage goes away. Then there's permanent or whole life insurance, which it never goes away. You can't outlive it. As long as you pay the premiums, that policy is going to always be there and is guaranteed to pay out a death benefit. But a whole life insurance in general, the premium is going to be higher when you start out the policy compared to a term policy, but it builds a cash value. So if you either walk away from the policy or it builds equity that you can even borrow against or take loans from. So if you look at what that cash value does and how it builds over time, your net cost of insurance can actually be lower if you need it for more, especially more than 20 years. If you're looking for really long-term coverage, it's the only way to have coverage that goes truly into your 80s and 90s and beyond. But also, if you're going to need coverage for more than 20 years, typically you're better off to start with something permanent that builds that cash value. It's kind of similar to if you buy a house versus renting. When you buy a home, you're locking in how much you're paying for that home. It may be a little bit more expensive than rent, but you're locking in what your expenses are over time, and you build equity in that home. A whole life insurance is very, very similar, where you're building that equity, again, that you can borrow against, or if you decide you don't sell it necessarily like you would a home, but if you wanted to cancel, you didn't want that insurance policy anymore, you can get the cash value back from the insurance company instead of just with a term policy, you just walk away and it doesn't give you any money back. So again, an insurance professional can really help you to uncover what are your needs and what might be an appropriate policy for you. A lot of times it's determined by what is your budget. Also, what are your needs, short-term and long-term?
Excellent.
And you mentioned on, do you need it for kids and things like that? More commonly, people that, again, are in their, in their 30s, 40s, 50s, that have mortgages, have kids, have people that are responsible, that they're responsible for, and have a lot of needs for their income to provide for their family. That's the most common need for having life insurance. But as I mentioned, there's really a lot of benefit in having a permanent policy that's always going to be there. The younger you are when you start coverage, the less expensive that policy is going to be over time. So if you I started with my daughter's insurance before she was a year old. And that policy by the time she was 10 years old was paid up. I'm never going to have to pay another dime into it. But that policy is always going to be there for her. It's built a nice cash value already. And she has that she can rely on forever and ever. So it's a really nice gift that you can give. And
you
also,
said she can borrow against it.
She can.
Are there limits to what you can use that money for, or can you use it for anything?
No, there's no restrictions on it. So you can use it for things like, a down payment on a house, or taking a loan from yourself instead of taking a loan from the bank. So you don't have to provide any type of like income verification.
Yep.
You can kind of use it as an emergency savings account and things like that. So there's no restrictions on what you can use that for. If you use that money, you can pay it back. It's encouraged that you pay it back, but you can pay it back on your own schedule. So you can kind of determine what payment you make to pay that back and things like that. So it really gives you a lot of flexibility if you need money in the future. Let's just say if you want a car loan, but we just went through a period of time where car loan interest rates were around 8%.
Yep.
Instead of buying a car and paying that 8%, if you have a policy with cash value, you can actually borrow from yourself when interest rates are high. Probably wouldn't want to do that when interest rates are low because it's cheap at that time to borrow from the bank. But it just gives you that options of having that extra pool of money to be able to use your money how you want to use it.
What an amazing nugget of information that it would never even occur to me to borrow against a life insurance policy. And, there are so many different things that you can use to loan from yourself and build your own assets.
And you can also, when you're purchasing coverage on a child that is young, you can also lock in their insurability, meaning you have that specific amount of coverage that you're providing for them, no matter what happens with their health in the future. But you can also put, most companies have provisions where you can purchase what's called guaranteed insurability, that as their needs increase over time, as they say, take out student loans, get married, have children, buy a home, things like that, they can actually purchase more levels, more insurance down the road at certain intervals. It's based on timing, and typically it's like every 3 years where you can purchase more insurance regardless of your health. So if God forbid your child develops a health condition or takes a medication or something like that makes it more difficult for them to get health insurance or life insurance, this gives them an option of where you've locked in their insurability that they can always purchase more if they need it. It's just an option; it's not required, but that also gives some flexibility to down the road. So it's a really nice option to have.
Incredible. So much to understand. Going to shift gears again and talk a little bit about renter's insurance. Mm-hmm. Why would you want it, and how does it help?
Sure. So a lot of people only think of renter's insurance as covering their personal belongings, their furniture, their clothing, their electronics, sporting equipment, things like that. If you have something that happens like a fire or lightning damage or theft, something like that in your home, and you have to replace all of those items all at one time, that could be really financially difficult for the average person to just go out and replace everything all at once.
Sure.
Renter's insurance does cover your belongings for what it costs to replace them today. So it's called replacement cost coverage, where again, it would give you that pool of money that you can go and replace them. But people typically don't think about some of the, let's say, more important but equally important coverages, like for instance your liability. Mm-hmm. As a tenant, as a renter, if you cause damage to the structure, let's just say something like a kitchen fire, or you put a candle too close to a curtain, or you dispose of a match or a cigarette or something like that in a trash can, it causes a fire, you can actually have liability to your landlord, where the landlord can sue you for damages to the building. If somebody gets hurt on your premises, let's say if you're responsible for removing snow from the stairs or from the driveway or the sidewalk or what have you, if you don't remove that snow properly or take care of the ice or what have you, and somebody slips and falls and gets hurt, you could be sued for that. And also your animal could cause damage, could bite somebody or trip somebody, things like that, and you could be sued for that as well. But it also covers what's called loss of use. If your apartment, the place that you're renting, is not livable because of a covered claim, again, fire, water damage, what have you, it's your landlord is not responsible for paying for you to live somewhere else, which, unless you've had a claim, most people don't realize that their landlord is not responsible for that. It's not covered by any type of landlord's insurance, no matter what insurance your landlord has. So your renter's insurance actually pays for you to live either in an apartment or get reestablished in a hotel, or get reestablished in another apartment. But it pays for you to live somewhere else while your home is not livable. So that can be a pretty, considerable expense if something happens to your apartment. Let's just say lightning damage or something, you can't live in there for 3, 4, 5 weeks. Your renter's insurance would pay your expenses to, say, stay in a hotel or a temporary apartment until you can get back into your apartment.
So Terri, tell me about homeowners insurance and what it typically covers.
Sure. So homeowners insurance covers damage to your building as well as your contents inside. So like your furnishings, your clothing, electronics, even your food and dishes, things like that. But it also covers if somebody gets hurt on your property, let's say if your animal causes damage, causes injury to somebody, or if somebody slips and falls on your property and gets hurt in Maine, it's not uncommon to have slips and falls on the ice. Also covers if your home is not livable because of any type of a covered claim. It's going to pay your expenses to live somewhere else while your home is being restored or rebuilt. So you can imagine if you have, for instance, a fire that you have to totally rebuild your home, you can be displaced from your home and have to pay somewhere else to live somewhere else for months. Could be even 12, 14, 16 months while they're rebuilding your home. That's a significant expense. And oh, by the way, you have to continue to pay your mortgage while you're displaced. So you wouldn't want to pay your mortgage and rent for another location. So it's important to have that additional coverage so that your home is being rebuilt, but you don't want to, end up behind financially because of other expenses that happen while your home is being rebuilt.
And that leads me to two questions. One, how is my premium determined? But also, how is what I'm getting paid determined if I have a claim?
Sure. Well, your premium is determined by how much coverage you have, the age of your home, where your home is located. It could be even safety features of your home, like if you have a home security system and things like that. The age of your roof can be a factor, but also with any insurance or with some types of insurance, your credit score is part of your insurance premium calculation and your claim history. So, if you have other homeowners insurance claims, it can make your premium more expensive. There's also your deductible that you choose on the policy. That's how much you pay out of pocket if you have a claim. The higher the deductible you choose, the lower your insurance premiums will be. But also, I like to explain to people to think about, you may want to keep a higher deductible because you don't want to file a small claim. Because again, that claim history, the frequency, how many claims you have affects your premiums in general. So if you're comfortable carrying, for instance, a $2,000 deductible versus a $1,000 deductible, it's a good idea to, take that break in premium and to be less likely to file something that would be a small claim that would make your premiums go up.
Gotcha. If you think you need to file a claim, but you're trying to figure out how much the claim will be for, if you've reported it at all to your insurance agency, have you now filed the claim? Or how does that work?
That's a bit of a loaded question because every company works a little bit differently.
Okay.
Some companies you can call and ask questions and they can answer questions whether or not something would be a covered type of a claim or not, and go over questions like what's my deductible and what impact would this have on my premium. So if you're trying to have that discussion and you don't want the insurance person to file a claim for you, it's very important to be very clear up front when you start having the conversation. Hey, I'm just looking for some information to determine if I should file a claim or not, to make sure that they don't report it. There are some carriers that require that basically any type of coverage inquiry gets reported. And so that can show on your insurance history report and again affect your price for insurance, even if you don't get a claim payout. So it's important to be very clear up front that, hey, I'm just looking for some information. If this type of thing happened, how would it affect my insurance? How does the coverage work?
Circling back, how does what you're paid out get determined?
Yes, so it depends on what type of policy you have. There's two different types on homeowners. There's two different types of policies. There's what's called replacement cost coverage, which is your cost or coverage to based on your cost of rebuilding today. And then there's actual cash value insurance, which is based on the value of your property and the age of the property today. So for instance, if your roof is 10 years old and it has a 20-year life expectancy, if you have major wind damage that destroys your roof, if you had an actual cash value policy, you'd only get about half the value of the roof minus your deductible, versus a replacement cost policy. They would pay you for the amount that it would cost to rebuild the roof, put the roof back on today, minus the deductible. So replacement cost is a much better type of insurance, but it's important to know what type you have. Actual cash value insurance tends to be a little bit less expensive for premium, but if you have a claim, you end up paying a lot more out of pocket to repair your home. So that's a very important distinction to know what you have. And then it also depends on what types of coverages you have. So again, it's important to know, if you have coverage for things like a backup of sewer and drain, if you have water in the basement, you have a failure of a drainage system, something like that, is that something that would be covered, especially if you have a finished basement? That's really important to know and to have coverage for. And your content, your personal property should also have replacement cost coverage as well, which a lot of insurance policies offer, but it's an important distinction to know if your content, if your personal property is covered for how much it would cost to replace today. Because if you had to replace everything, whether it's a room or two that's destroyed or the whole home that's destroyed, if you had to purchase all of your furniture, clothing, all of those things all at once, that's going to be a lot of money out of pocket for you and unaffordable for most people. So you want to have that replacement cost coverage on both the home and your contents. It's also important to make sure that the total amount of coverage that you have on the home is the right amount of coverage. So that's something that you want to check in on from time to time and make sure that the coverage stays adequate for your needs. It could be that you've made changes to the home, you've made additions or renovations or improvements. Or it could just be, in periods of time like we just went through where the cost of building really skyrocketed. You want to just make sure that your coverage is keeping up with those really high costs of building materials and labor to make sure that you have enough coverage to rebuild that structure if something happens.
Got it. So what is, in your experience, your 18 years, the number one thing that people think they're covered for in insurance that they're not, that they need to think about and ask about?
Well, on the homeowner's insurance, a lot of people think that homeowner's insurance covers anything that can happen to your home. A homeowner's policy is not a maintenance plan. It does not cover improper construction. It doesn't cover things that are maintenance issues. For instance, if your shingles on the roof just become aged and start leaking because they're old, that's not a covered type of a situation under a homeowner's insurance. If wind blows those shingles off or a tree lands on your home and causes damage and then water's coming in, that is sudden and accidental. That is a covered type of claim. So it's important to do regular maintenance on your home to maintain it, because the homeowner's insurance doesn't cover just any single thing that could go wrong. It doesn't cover like deferred maintenance and maintenance type issues.
Gotcha. Anything that's not covered under either life insurance or auto insurance that most people think are, or renters?
On auto insurance, I would say probably the number one thing that people think should be covered would be, again, maintenance type issues. Could be something that goes wrong with your engine of your car while you're driving down the road, and people call and say, hey, but I was driving, isn't this a comp collision or what have you? It doesn't cover maintenance. It covers if you hit something, if somebody hits you, things like that. And also the car rental on an auto policy. A lot of people assume that just because you have quote unquote full coverage, that means that you have coverage for a car rental. Car rental coverage, if you do have it, only covers if your car is damaged because of a comprehensive or a collision loss, something that's covered by your policy. But again, rental is an optional coverage, so you want to verify, especially if you're dependent on having your car to drive to work every day or to get the kids to school or what have you. If you really are dependent on having the number of cars that you have, you don't have an extra, that you want to make sure that your policy has coverage for a rental car if your car is damaged in a claim. Repairs right now are taking a lot of garages are several months out before they can get to your car. For collision damage specifically, not for mechanical damage. But so if you don't have that rental car coverage and you're a long period of time without your car, that can be really an issue for a lot of people. So a lot of people just assume, like I said, if they have full coverage, that they have rental car coverage. That's not always the case.
Terri, thank you so much for all your time and information. Are there any tidbits you think we didn't cover that our viewers need to know?
I would just say I really hope that this has prompted some questions that people may now know some good questions to ask their provider to make sure that they have the right plan for them and to make sure that they have the right insurance professional to guide them through the process. And also just how important it is to have the right amount of coverage and the right coverage for you. So saving a few dollars per month may not be the most important thing versus having the right coverage. So I hope this has helped to spark some questions and some ideas to make sure that you have the right plan for you.
I know it has for me. I have to say I'm super sad to know that you're retired, as clearly you have so much knowledge over your 18 years of service. But if people are looking for a provider, I can certainly do my best to guide them to people that might be a good fit for them. So if you want more information, please reach out. If you have questions for Terri about insurance, we can answer them in a future podcast. Thank you for watching.